Yeah, good morning, everyone. Uh, the US market also saw correction yesterday. Post Indian market saw corrections. Uh, the US market correction was led by mainly expectations on 16th of December, that is day after tomorrow. The Fed meeting will be there, and they may increase the tapering in this particular meeting. And the expectation is that from the 15 billion, the tapering can double to 30 billion. And Fed can even talk about forwarding the interest rate increase. So in expectation of that, we saw some corrections in the US market. Futures of the US market are flattish to marginal positive. And taking clue from US, even the Asian markets are also down. Whereas in commodity, we are not seeing a similar trend. Commodities are oil is marginally down by 0.5%, but aluminum is up by around 1.3%. Copper is down by around 1%. Iron ore is flat and steel is up by around 1%. So metal is seeing some mixed reactions. Yesterday, inflation figure came, and that came at 4.91% versus expectation of 5.10%. And month on month, that is the last month, it increased by 4.48%. The main key reason for increase in the inflation month on month is on account of higher food inflations, whereas in this month government cut taxes on the uh, oil and diesel, and that got some benefit because of that. So even thereafter, the inflation moved up month on month. So I'll request now technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. This is Swati. Looking towards the global market and the Asian markets, I believe our Nifty is likely to open with a little bit gap down around 17,340, 300 levels. The Nifty will get open. The immediate support for the Nifty will lies at 17,300. If it's break that level, then 17,240 to 200 levels can be seen during a day. Whereas on the higher side, 17,400 will act as immediate resistance levels. Any move above that level, we expect the Nifty to move to take a pullback rally towards 17,500 to 17,540 levels. The overall view will remain cautious on the Nifty as long as Nifty trades below 17,600 level, which is the strong resistance on the Nifty end. Looking towards the Bank Nifty, I believe Bank Nifty looks weak compared to the Nifty. As of now, we are witnessing that the yesterday we have seen that the Nifty Bank Nifty had just touched the resistance of 37,700, but somehow faced a strong resistance of that level and just maintained a closing bill near the 17,100 level, which gives a little bit cautious sign. Today, the 37,000 will act as an immediate support zone. If it's maintain a closing below that level, then this selling pressure is likely to be intensified, which might take a Bank Nifty towards 36,800 to 36,500 levels on the lower sides. Whereas on the higher end, 37,300, 400 will act as an immediate resistance level. Any move above that level, then only we can witness some pullback rally towards 37,600 to 37,700. So the overall view on the Nifty and the Bank Nifty will remain cautious as long as it trades below the resistance levels. Coming towards the Nifty Finance for the intraday purpose, 18,100 will act as an immediate resistance level. Any move above that level only we can witness some positive momentums into the Nifty Finance towards 18,200 to 18,240 levels. On the flip side, 17,800 will act as immediate support level. Below that level, we expect to be selling pressure likely to be witnessed, which might take a Nifty Finance towards 17,700 to 17,600. So these are the important support and resistance level for three indices. I would like to request all the traders and the investors to be a light on the long positions. If you're having any long position, just hold on with the strict stop losses. That's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, still, the overall open interest is still less. At this point of time, the VIX has gone above the 16 odd levels, but still, it has come down from 22 levels. The data as of yesterday doesn't suggest that so much selling will come in. Yes, we are opening down 17,300 odd. We will open at 17,200 is the next support area, and if that is not held, you can still see 17,000 levels from the Nifty perspective. But looking at the overall data, I believe there is going to be a good bounce back coming in very soon. So buying on dips is what is suggested. From the stock specific front, the banking sector for most part of yesterday was very strong, and we continue to believe some good short covering action is likely to come in. Axis Bank, ICICI Bank, SBI, even HDFC Bank, these banks are likely to witness some sort of short covering action, which they witnessed in the first part of yesterday as well. So we can see some amount of support buying. Also, the pharma sector has started to show, strength, and it is likely to move up. So Lupin, Dr. Reddy, Oro Pharma, Sun Pharma, these stocks are likely to witness some buying in the coming sessions. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Yesterday, the Shriram Group announced a merger between Shriram City, Shriram Transport, and Shriram Capital. And the merged entity would be named as Shriram Finance. The merger shall increase cross-sell opportunities, reduce business cyclicality, as well as reduce the cost of funds. And company believes that these actions will result in bottom line expanding by 10%. Uh, the total outstanding loans of Shriram Transport are at 1.2 lakh crores and Shriram City at 30,000 crores. So combined entity would have a AUM of 1.5 lakh crores. And we feel the company post merger should continue to be perceived as a CV financier because 80% of the loan book remains CV. If we look at the CV performance of Shriram Transport, then in last couple of quarters, it has been superior compared to even a company like Chola and Sundaram Finance. So if someone wants to invest for the long term in the merged entity, they should treat it as a CV financing company only. And from buying point of view, as per the merger ratio, currently buying Shriram City makes more sense as that is available at around 6% discount based on merger ratio. So we are positive on the merged entity. Now coming to automobiles, as per channel checks with auto dealers, the overall sentiment remains muted. The wholesale volumes will continue to see year-on-year decline in December month as well because of ongoing supply-related issues for on the PV side and because of subdued demand environment in the two-wheeler case. However, CV retails continue to witness positive momentum in month of November, and in the second half, their performance should be good on the back of low base as well as in slightly increasing fleet demand, and also freight rates have improved. Arcon International, the PSU construction company, has emerged as the lowest bidder for highway construction in Punjab with a project value of 1100 crores. And the completion period is 2 years. So this is positive for Arcon. Today, one IPO will be listing Anand Rathi Wealth. We had given a subscribe rating. Issue size is 650 crores. Market cap will be 2300 crores. Issue was subscribed 10 times and is expected to list at a premium of around 10%. Price per share is 550 rupees. Company is essentially a play on the booming growth in the HNI investors in India. Company especially targets HNIs who are seeking returns which are just more than lifestyle inflation, that is returns of between 10 to 14% only. The entire revenue comes from distribution of mutual funds and structured products to HNIs. by structured products, they are basically nothing but a combination of NCDs depending on client requirements of risk returns and tenure. So on comparing with peers like IIFL Wealth and Edelweiss Wealth, we observe Anand Rathi's ROE has consistently been higher than both these companies, and valuation of 19 times current year annualized earnings. The IPO seems there is some scope for upside given that earnings growth potential of 20% going forward, and also cross cycle ROE in bad year it does 20%, but in good years it ROE goes close to 30%. So we feel it's a decent company. Today, one IPO will be opening, Data Patterns. It's a defense company, and it will be closing on Thursday, 16th. We have a subscribe rating on this also. Issue size is close to 600 crores. Market cap will be 3,000 crores. Price per share is 585 rupees. Within defense space, almost 60% of the sales are coming from radars. Company has supplied parts to prestigious projects of government like Tejas aircraft and BrahMos missile. The USP of the company is that it is not only a manufacturer but also a developer of products. So that is the reason that competition is lesser in the development side. During product development stage, the revenue is very less, as first the Ministry of Defense has to approve those products and see if they are as per their requirements. And once satisfied, the Ministry of Defense will convert those development orders into production orders. So this is when the company will enter into mass production scale. So company has made this transition from development to production stage for many products in last 2-3 years, which is leading to high revenue growth of 30% CAGR. We expect this growth to continue. Also, as many of these products are solely developed by and produced by the company enjoys good margins and ROC. EBITDA margin is at 40% for FY21, and ROC is at 43%. Also, order book to sales is at 2.6 times, with order pipeline which is very strong at 1,500 crores over next 3 years. So typically, most companies catering to government have a very high working capital cycle and low cash flows. But in this case, the higher margins are compensating this high working capital cycle, and that is why the cash flows are healthy in this case. So we have a subscribe rating on Data Patterns IPO. Thank you.
Good morning. The promoters of Apollo Hospitals will sell 7 lakh shares via block deal today. This is like their offloading 0.5% of their cumulative stake. The floor price of the shares to be offered has been fixed at 5,050 rupees. That's a discount of around 3% of yesterday's close. Once this is executed, the overall shareholding of the promoters would be come down to 29.32%. So this is marginal negative for Apollo Hospitals in today's trade. Thank you.
So anything else? So that's all from us. Thank you very much and have a great day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.